Hello, welcome everyone to our webinar, Countdown to End of Financial Year, Legal, Tax and Tech Insights for Australian Businesses. My name is Helen Young and I'm the Tax Practice Leader for LegalVision. Today, I'm joined by Leanne Berry, who works for MYOB as Partner Engagement Manager for Australia and New Zealand, and James Carey, who is a Director at Prime Partners Chartered Accountants. Before we begin, I just wanted to cover a few housekeeping items. As you can see here, you'll receive the recording and slides in your email after the webinar. At the end of the webinar, you'll be able to submit Q&A and we'll answer these. Or actually, you can submit Q&As throughout the webinar and we can answer them at the end. At the end of the webinar, you'll also receive a feedback survey. If you can complete that, that'd be really appreciated. For the next 48 hours, you can claim a eligible free consultation for a complimentary consultation with LegalVision. MYOB also has a special offer in which LegalVision members can receive 6 months for free. So you can click on that link below and be able to access that MYOB special offer. You may have also actually received a poll question as well that's popped up in front of you on your screen. We wanted to do this just to gauge, what type of areas that you find the trickiest at this time of the year as you're preparing for the end of financial year. So the questions we have, I guess the answers or the choices you have is staying on top of key deadlines like STP finalisation, TPAR, ESS and Division 7A, reconciling expenses, cash flow and R&D reporting, finalising the trust and dividend documentation, understanding your potential tax liabilities for the year, planning ahead for the new financial year, or you're just not really sure, you're just here to learn. If you can pick a choice there and we'll hopefully get some results soon. Whilst you guys are choosing those, that poll question, going through that, I'll just cover the agenda we have today that we'll be covering some of the topics. So we'll be focusing on cash flow considerations as we're leading up to the end of the financial year, dividend and trust distribution payments and things to consider on that front, some common mistakes that our panelists will share with us and their experience that they've come across, contractor payments and deadlines, ensuring your trusts are compliant, and how we can prepare for the new financial year, and any kind of key business indicators that we can track as we go along. So those are the key things that we'll be talking about. I'm just seeing we've got some results yet on the poll. Oh, great. Okay, so it seems like the key things for people that are attending today are, well, 44% are here that find the trickiest is staying on top of key deadlines like STP finalisation, TPAR, ESS and Division 7A. And the next area is finalising trust and dividend documentation. And quite a few of you are just here just to learn. So that's really great. That's good to know. So I think, it's something we can definitely focus on in this webinar is talking about some key deadlines. Great, so let's get started. Look, as we kind of come into the end of the financial year, especially post an election, I think the topics being discussed today are really front of mind for a lot of people. It'd be really good to know from our panelists today some of the key things they think they should be, you guys should be focusing on at this time of the year. Leanne, maybe you could start us off as a bookkeeper. Can you share with us some of your thoughts around this and the key things that people should be thinking about at this time of the year?
Yeah, certainly. Thanks, Helen. Look, I guess from our point of view as bookkeepers helping our clients, the key deadlines that we need to think about are those finalisations for end of financial year. So STP finalisation, which is due to be finalised and lodged with the ATO by the 14th of July. So that's a really important one. And then the TPAR reporting, the taxable payments annual report, needs to be finalised and lodged with the ATO by the 25th of August. So with STP finalisation, what I can, or the hot tip that I could give you today would be to start looking at doing your reconciliations now. So if there are any problems between what's been reported to the ATO and what you have in your software, which is actually the source of truth that does get reported to the ATO, you can fix any of those errors or mistakes or non-reports, now, and then by the 30th of June, hopefully you've got a clean set of payroll financials that you can then lodge your STP finalisation on. If you have any concerns, the other hot tip is to talk to your advisor, talk to your accountant or your bookkeeper, and get them to help you, because it is really important to get those figures correct and get them lodged by the 14th of July.
What's the penalties if you don't lodge it on time?
Look, generally the penalties, the first one will be you'll get a nasty note from the ATO to say that you haven't lodged and why haven't you lodged and you need to lodge. I haven't seen any penalties incurred against business, but the other thing is that most employees, I've seen it over and over again over the years, by the 1st of July they're saying, where's my finalisation? I want to get my tax done. So, not only is it the ATO, it's also your employees that are desperate to get their tax returns done and get those lodged. So, I haven't seen any penalties incurred, but it is something that the ATO is on top of all the time.
Yeah, that's really great. Thanks, Leanne. James, what about yourself as an accountant? What can you add to as to some of the key things that people should be thinking about this time of the year?
Yeah, so I mean, we have a bit of crossover with Leanne and what bookkeepers would do, but we would always recommend that clients have that really close day-to-day relationship with the bookkeeper to keep on top of that stuff, and then that leaves us to do some of that. The more we are looking at tax planning, so we're starting a process with all of our clients now doing tax planning and sitting down for the business and for the family group. The best kind of tax planning is stuff that you actually do in advance. It's very hard to do it 6 months later after the end of the financial year when you're sitting down with your accountant and we say, look, you could have tipped some extra money into super and that would have saved you X many thousands of dollars of tax. And a number of people say, is it too late to do it now? It's like, yep, it's about 6 months too late. So we're having those conversations. We're also trying to make sure that those compliance type things that we'll touch on later around you're actually doing dividends, you're declaring your dividends now. So, under, you're fulfilling all your corporation's law duties as directors. It's very common in sort of small business and accounting land that, you kind of declare the dividends when you sit down with the accountant 9 months later and go, oh, yeah, we declared a dividend back then. But if you didn't actually, have the resolution or the minute and those sorts of things, legally it probably didn't happen. Making sure that people understand you've got loans outstanding to the company, either repay them or understand the implications of not repaying them. So these are the conversations that we're having, and just as we'll probably touch on this a bit later, but some people, like, we're noticing that the ATO has kind of moved into a new kind of reign of terror when it comes to fines and penalties. Like during COVID, they were a great partner to business, and that probably resulted in, larger tax debts because the ATO had like a thing to not chase. We're having clients getting $1,500 fines for being, 2 weeks late lodging BASs.
Yes.
And interest and penalties, which used to be quite easy to get remitted, it's getting next to impossible. So
yes,
making sure you're getting stuff in on time. And again, STP, I haven't seen fines before because it was new and, they're sort of wearing kid gloves, but I think that we'll probably start seeing these coming through.
Yeah, we've also seen a lot of people receiving ATO debts and fines that appear to be unreasonable and not being as lenient as they used to be in regards to interest remissions, and also an increase in direct penalty notices as well. So that's something I think people need to be aware of that they don't seem to realise as well. I mean, as you're probably having a lot of conversations with people this time as well about cash flow. How can they, ensure they have enough cash flow for this end of the financial year, but also for the next? And what can they do now potentially decreasing any assessable income to actually have that cash flow. What are your thoughts on that?
You know, a lot of this goes hand in hand with, you know, this forward planning, which often, you know, we'll call it tax planning, but, you know, might be better calling it business planning. So some people will be starting to work on their budgets, and this is a combination, you know, cash and, you know, P&L sort of income expenses. You know, the often understanding the tax position is quite important, particularly for newer businesses who, or, you know, growing businesses where, you know, they may not have been paying the prepayments, the pay-as-you-go installment, or, you know, the business has grown and the installments aren't keeping up with it. And so you get to the end of the year, and if they're not aware that there's a $100,000 tax bill coming, and, you know, once we lodge that, the ATO is going to want then another $100,000 in prepayments for the next year, it's really important to kind of have a good handle on what's coming down the road. And you know, we tend to focus on the tax obligation and, you know, VATs, you know, those sorts of things.
Yeah.
But, you know, you know, the business also needs to be generating enough cash to pay for those things.
Yeah, I mean, cash flow is king, and we know that in business, that cash flow is king. And I think there's a few things from a practical point of view you need to be doing to make sure that your cash flow is always in a good position. First off is always invoice fast, and have options for your payment, for your clients to pay. So with any of the accounting softwares, there are great options for them to pay the way that the customer wants to pay. You know, there's tap to pay, there's all the direct debits and all of that sort of thing. And our research shows us that customers that have those options turned on for those payments, those invoice payments, generally get paid 5 times faster. You know yourself, you know, you get a bill, and if it's got a pay now button on it, you generally go in and do it so that you don't forget it later on. It's the same option in business. So invoicing fast. Having good debt management policies in place. Again, software can help you with that, because there are things like automated reminders that you can set up in software to make sure that that's, you know, getting in front of the customer all the time. There's automated statement reminders and things like that. And I think the big thing is that you need to set customer expectations up front. These are my terms, these are my conditions, and this is what happens if those terms and conditions aren't met. So having that conversation with a customer, if it's, you know, if they're being invoiced, it's not, you know, it's not as hard when you've got cash up front and things like that. But in that invoicing situation, it's really important to stay on top of that and have a good debt management policy in place. It's really hard as a small business owner where you're wearing multiple hats. You know, you're the salesperson, you're the marketing person, you're the accounting person, all that sort of thing, to be the good cop, bad cop in these situations. So the other thing is, you know, if you're looking at maintaining great relationships with your customers, sometimes it's really good to outsource that debt management to somebody else to handle for you, so they can be the bad cop and you can keep those great relationships with your clients. So there's a couple of things. And just one comment that someone made on the Q&A, going back to debt with the ATO. The best thing, I think James would agree with me here, the best thing that you can do is engage with the ATO. Whether it's you talking to the ATO or whether you're engaging with an accountant or bookkeeper, a BAS or tax agent to talk on your behalf, the worst thing that you can do is stick your head in the sand and hope they won't chase you. The best thing to do is be proactive. You know, the ATO are willing to work with you on debt, and sometimes it's great to have that advisor assisting you in that process. And we do that quite a lot with our clients, and I'm sure James does as well.
Yeah. We definitely see this a lot, where clients thinking sticking their head in the sand is going to be the way to resolve it. And I completely agree. As a small business, you're wearing multiple hats and there are so many things going on. You don't really want to deal with that debt. You're just pushing it until you really have to deal with it. But by that time, you've incurred further interest. The ATO is not happy with you and you get further notices. So, and you're in a worse position and it's harder to negotiate out of. So I definitely agree, you know, getting started straight away with those conversations with the ATO is something we do as well. And definitely I think James does it as well, is just speak to your advisors straight away and having those conversations. With cash flow, I saw that the instant write-off measures that were passed in March earlier this year, is something that a lot of taxpayers may be able to take advantage of, with particularly in trying to ensure they have cash flow, which will give them, some instant deductions this year and potentially reducing taxable income. Do you have any thoughts on that, James?
I thought it was going to be interesting when they initially said, yeah, the 20K threshold is going away, which would take the threshold for small businesses back to $1,000, which is pretty painful. Like, I think everybody's gotten quite used to, I'll buy some equipment and be able to instantly write it off. The $1,000 threshold, I don't know, probably goes back 15, 20 years, and the world has moved on, and $20,000 is probably a good balance of a level, but they've only extended it for another 12 months. So we'll see what happens in the next budget. And I wouldn't be surprised to see that they do drop it back down to $1,000. So it's the kind of thing that, we always tell clients, don't buy something to get a tax deduction, because all the tax deduction does, if you're a small business, is instead of costing 100%, it's really just costing you 75% because the ATO is subsidizing you through the deduction. The other thing with the instant asset write-off is that it is really just a timing issue, because you buy a laptop and depreciate it, you might claim it over 2 years. The instant asset write-off just lets you get the benefit fully now. So don't go, like, this was a problem we saw a lot during COVID when the threshold was really high. People would be like, oh, I'll go and buy a car or a new ute, and the ATO is paying for it. It doesn't really work that way. Like, they're like, why didn't you tell me? I was like, I did.
Yeah.
Don't go and spend money you don't need to, but
or you don't have.
Or you don't have.
Yeah, and getting yourself into debt.
If you were planning on buying some equipment, I was speaking to somebody who's just started a small excavation business, and he's like, oh, I'm going to go and buy a little sort of digger as part of his things, and he can spend $19,000 on a digger and $10,000 on a trailer, and he'll be able to fully write those off and claim that deduction. So it is a good thing if you
need it.
if you need it. But don't spend the money to say just for the purpose of tax deduction.
And
that's
James,
a good tip. Yeah.
With anything where you're looking at that asset, building those assets, again, it's great to talk to your advisors before you do it, so you can see the implications on tax and tax planning as well, and not just go out and say, I've done this, and you've bought $100,000 car, but you can't write off the $100,000 car because there's private expenses and all of that sort of thing as well. So just
you haven't considered fringe benefits tax.
That's right. Just having that conversation prior to that investment is always a great idea as well.
Yeah, that's a really good tip, Leanne. We had in the poll question a lot of people that were concerned about their trust distributions and compliance around Division 7A. I think we might just move on to the compliance side, because the ATO has increased its audit activities on private groups and small businesses, particularly focusing on trust and Division 7A. I think this is in light of the 100A rulings that have come out recently, and also the Bendel case that recently came out. We typically, from a legal perspective, the kind of the main compliance that we see before the end of financial year for trust is ensuring the trust distribution resolutions are prepared accurately and also on time. This is really, making sure that you've read the trust deed, or your advisors have read the trust deed, if they're preparing the resolutions for you, and ensuring the definitions and the classifications of what you're actually distributing, whether it's income or capital, is accurately described in the resolution, and also that the beneficiaries that are receiving the distributions are actually beneficiaries who can receive under the trust deed. We've also seen with people that have made family trust elections that they are aware of how that works, and speaking with your accountants as to what they can do, because they've made an election, because it's restrictive, and some people don't understand what it means, and then they've done it and they make distributions and they fall outside of those rules. So I think making sure you're speaking to your advisors, reading your trust deeds, having a trust deed, and if you don't have one and you think you had a trust, we've actually had this a lot recently where people have lost their trust deeds, making sure you're getting advice on what you need to do in case you may resettle your trust. So I think if you're making any trust distributions, having those conversations with your accountants or your lawyers to ensure you're complying with your trust deed, preparing the resolutions well before 30 June and having them signed before 30 June. I think the other thing, I mean, James, was there anything you have to add from an accounting perspective on that front with the resolutions?
Again, we make a big effort of making sure that we're helping clients have them in place. We're emailing them to them well before the date, because we, you want to be able to demonstrate, if the ATO ever come along, that you haven't just gone and printed it out and signed it today. And we are very conscious to tell clients, don't backdate anything. Don't sit down with your accountant at the end of the year, like 6 months later, and say, oh, we could optimize this if we change this distribution to here to there. You don't want to have multiple copies of minutes floating around. You don't, like, people have gone to jail for giving the ATO false,
Yes.
backdated documents. So when it comes down to save a couple of grand, is the risk trade-off of a potential jail term worth it? Probably not. So this stuff, although there may not be heaps and heaps of, not every second client is getting audited. There's one out of, I don't know, 1,000 maybe who's getting picked up. Just because you don't see a lot of it and you don't hear a lot of it, you still want to make sure that you are in a safe position if you do ever get pulled up. So we have a big push on making sure that people have Division 7A loan agreements in place. People are doing their dividends to make minimum repayments or making those repayments in cash. It's just, there are all of these rules around businesses, trusts, companies, and the tax integrity rules, or whatever you want to call them. They're really complex, and there are so many traps, and it's, one piece of paper makes the difference between a couple of $100,000 in tax liabilities because you didn't have a loan agreement in place, and the ATO deem this, couple of $100,000 loan that you've borrowed from your company, deem that as a dividend. Like we're pretty good, but I still don't want the ATO to ever come and start, looking into anybody with a trust with fine-tooth combs, because it's so easy for things to kind of slip through.
Yeah, you raised such a good point about the integrity rules being so complex, particularly for a small business. Like Leanne was saying, you wear multiple hats. How do you, stay on top of all your tax compliances, particularly when you're moving money around between, trust to a bucket company potentially to you as a beneficiary or a shareholder, and then you've got loans from the company to you, and you're repaying them back. When do you repay it? When do you put in place a Division 7A loan agreement? There are so many things that you have to comply with, and staying on top of that is so onerous. It's such a burden on taxpayers.
And I mean, unfortunately, a lot of these things are kind of designed within the system. And I don't know, it was 8 years ago, there was a proposal to rewrite all of the Division 7A rules, to simplify them, to say, look, you don't need to go and get a document signed. We'll just assume that the rules apply, and it'll be a 10-year term, and kind of simplify this. And nobody ever passed that particular legislation. And the government of either flavour don't really seem to have any desire to fix this stuff. They'll tinker around the edges, and they'll make it slightly harder for trusts, but they won't simplify, like they won't make it easy for small business owners. So that's my kind of feedback there. It's such a minefield, and you just need to have good advice and support.
I definitely think having good advisors on your side is the key. I mean, I understand the Division 7A rules are there for a reason, obviously to prevent people from, I mean, when people do this, they want the money to benefit them and they never repay it, and they should have paid tax on it as a dividend. But then there are people actually trying to fall within the rules, and then they breach it accidentally because they didn't know.
Yep.
And I think there's been a lot of uncertainty around the Division 7A rules and bucket companies, the unpaid present entitlements from trust to a company because of the Bendel case, and there's no real clear answer for taxpayers on that front as well. So I don't know how you're dealing with that, James, as we're coming up to the end of financial year, because the ATO has issued a ruling saying they've already appealed, or they've applied for it to appeal this case because they've lost and it doesn't align with their views.
And yeah, I mean, very quickly, in case the audience isn't aware of, it has been in the paper, but if you have a trust, it was a very common situation to say, I'm going to allocate some of this trust income to a company, a bucket company, because it would pay tax at 30% company tax rate versus an individual at the 47% rate. And the trust would then keep that money, reinvest it. And this was very common for trading trusts, very common for investment trusts. And so you'd end up with these bucket companies with these large amounts of money owing, but that cash was never paid down, and the trust got to kind of shield that income at the 30% tax bracket. There was a case like 2009, and the ATO kind of won some points, but what they said is, well, we consider that if there is an unpaid loan to a bucket company, an unpaid present entitlement to a bucket company, we consider that to be a loan, and these Division 7A rules will apply. And if you don't apply them, we're going to come after you. And but it was an unsettled, question at law, but the ATO has been effectively setting tax policy at their level rather than getting legislation, rather than relying on court. So for the last, 12, 13 years, we've been making sure that if you're going to use a bucket company, you actually have to pay the cash down. The Bendel case was somebody who didn't pay the cash down, and the ATO said, all right, we're issuing you with an assessment for not following the rules and penalties and fines. And he's won every single case, and he's just won at the full federal court.
The full federal court, yeah.
And so the ATO has lost, but they are appealing, and their position is, even though this is an unresolved question, our previous guidance still stands. And so as advisors, we have to tell clients to do what the ATO says. The ATO's position is this, and if you don't, and it turns out that they win, you just want to, unfortunately, we have to take the conservative approach.
Yeah, no, definitely. Goes back to being a difficult minefield again. I wanted to move on just to contractor payments and deadlines that are coming up for a lot of our taxpayers and people online. Leanne, do you want to touch on anything further in regards to, I know you mentioned before with the TPAR and also the STP deadlines. Did you want to add anything else at this point?
Look, I think, the reporting is pretty standard and fairly simple for those contractor reportings. It's all based on cash, so it's all based on what's been paid to the contractors for that year from the 1st of July to the 30th of June. So software handles this really well. So if you're using your software, your TPAR report should hopefully fall out of the back of that, so long as you've got all the boxes ticked and checked. But again, if you're having any problems with that, you just need to be talking to your advisors and making sure that you've got that set up correctly. I think also the other thing to think about is super on contractors and things like that, making sure that if you're paying contractors who are deemed to be employees, then you need to be paying super for those contractors as well. That's another important point that you need to be thinking about. There is a calculator, if you like, on the ATO website, or an advice on the ATO website that helps you to go through and determine and deem whether a contractor is deemed as an employee as well. So you can use that to make that final determination.
Have you had much experience with the new, I guess, changes that have been implemented in regards to electronic distribution platforms where there's particular deadlines on reports being lodged?
No, that might be James.
Yeah, okay.
Sorry, say that again. I was just
with the
answering one of those questions.
the electronic platform operators, where you have a platform and you have certain deadlines to meet. Has that come into effect for you guys from a practical perspective?
Do you mean like the when you say platform, like the Amazon? So the answer is I also have
Yeah.
So
Yeah.
no, those I haven't dealt with those deadlines.
Yeah, okay. They're quite new, so I'm not sure if many people have actually come across them yet. So I thought maybe I'll just touch on it to see if you guys had any experience on it. But something that a lot of people on here, there are startups or small businesses that are issuing any equity for the employees. Something also to keep in mind is if you are a startup and you're nearing your 10-year mark of having the small business or the startup concession that applies to your employees, is just making you issue them before 30 June as you're coming out to the 10-year mark. But yeah, that's great, Leanne. Thank you for going through those deadlines. I think it'd be great kind of to talk about some strategies on how we can prepare for the next financial year. So now that we've kind of talked through some of the planning, cash flow and deadlines that people need to think about, how do we now think about what do we need to prepare for the next year? So looking ahead, maybe Leanne, if you could start us off, what are some of the things that we should be thinking about for the future?
Absolutely. So there's a couple of practical matters that you need to think about. The first one is the national wage case that generally comes down by the first or second week in June. So there'll, generally, it generally happens every year, there will be an increase to wages across all the modern awards. So make sure that you're on top of that. You can subscribe to Fair Work Modern Awards for your industry sector or workplace so that you're getting the notifications on those. There is what the Fair Work calls a pay and conditions guide, or what we call a PACT guide, that comes out from Fair Work and the Fair Work Ombudsman as soon as that determination is made. So the other thing to be really aware of is that any national wage rise is implemented from the first full pay period after the 1st of July. So that means that if you've got a pay period that spans, the last week in June and the first week in July, it's paid on the first full pay period in July, not that period. The other practicality is that super will increase to 12% from the 1st of July. Now, most software handles this automatically, but just go and make a check that your software is handling this, and if not, make sure that you're increasing that. And that takes effect for any payments made to super funds from the 1st of July as well. So again, they're two practical considerations that you need to have in place when you're doing that end of financial year finalisation. The next thing I think is to be a little bit retrospective on what's happened throughout this financial year. So what were the good things? What were the bad things that happened in your business this year? And how can you reduce or eliminate the bad things and keep the good things going forward in your business? So it's about looking at what worked and what didn't. And why didn't those things work? And is there some kind of automation that you may be able to put in place to eliminate and reduce time taken? Because, again, small business people wear many hats. So where you can automate with software or apps or connections to apps in your accounting software, it's always good to look at those processes and make sure that you're keeping up to date with those. Again, most of your advisors, bookkeepers, accountants are on top of what's going on in software and what the landscape is like across industry sectors and things like that. So it's great to have a little bit of a chat about, I had a problem with this. Is there some way that we can deal with that and take the good stuff forward? The other thing is to always look at some cash flow forecasting or some budgeting for your business. So think about what your goals are for the next 12 months, 2 years. Where do you want to see your business going? Where do you want to see, your family? How do you want your business to support your family life and things like that? And look at what the strategies will be that you would like to implement for that new financial year. talk to some solid advisors, the pub talk. I get a lot of clients that come in and say, oh, Joe down the pub told me I should be doing this.
Yeah.
Well, Joe, if Joe wants to tell you that, he should be a bookkeeper or he should be an accountant. Get the advice from trusted sources. That's really important because, Joe might be a carpenter that's 50 years old and he still does things from 50 years ago, but times move on. So you need to make sure that you are keeping current with everything. So, a couple of points there is, make sure you're getting your compliance right. Have a look, have a think about what you did. If you don't understand your numbers, get somebody to help you to understand how to read those two really important reports, your balance sheet and your profit and loss statement. Talk to your advisors about getting a better information and improving your financial literacy around that so that you can make really good decisions on your business.
Yeah, thanks so much for those great tips, Leanne. We find that a lot of clients also have that pub talk as well. The circumstances between two taxpayers are really different as well, and someone doing something may not necessarily apply to you. And so they always say, well, I spoke to Joe Blog down the street and they say they're doing ABC. Why can't we do that? So I definitely agree, making sure you get solid advisors, getting the advice that's right for you and your business and what your goals are is key.
And we've seen an increase too, Helen, on ChatGPT advice, like the Dr. Google kind of thing.
Yeah.
Look, ChatGPT is a fantastic tool to help you, but again, it doesn't always necessarily get it right. So again, using that information and ensuring that you're talking to your advisors about, this is what I did. ChatGPT is a great tool. I use it all the time. But making sure that the information, as you said, relates to your business is really important.
We get a lot of clients actually preparing the legal documents through ChatGPT. It is a really great tool and it does help you get the foundations of what you need and particularly some of the questions you need to ask your advisors. But I do think, it is just a tool. It's not an advisor, and you should really be going to your advisors to ensure whatever it is that you're preparing or the answers you're looking for are confirmed with solid advisors. Going to the, you mentioned, technology and how you can use it to help streamline your business. I definitely think that is key as well. Going back to the point you raised earlier about, small businesses having to wear many hats and doing multiple things. How can you streamline a lot of their work and outsource it? For a lot of small businesses, potentially they can't afford to have the cash flow to have a certain level of advisors. So maybe it is speaking to someone that can help you with utilizing some of the technology and the tools, using MYOB, for example, and using the tools that they have available to actually make your business more efficient. And I think some people don't realize that paying some money can actually save you money,
It's absolutely an investment. You
Yeah.
can't see it as an expense. It's absolutely an investment
Yeah.
in making sure that you are compliant and making sure you're using any of these tools to the best of its ability. And there are so many tools and so many automations in software. MYOB's automations are fantastic. So there are so many tools that you can use, but investing in that advisor, whether it be a bookkeeper or an accountant. And look, I've been a bookkeeper for 30 years. I started when I was 5 years old, but that's that's a bit of time. I've seen it all, and the people that don't invest early in getting that great advice and getting their software, they generally have to spend more money in the long run to get it right.
Yeah.
So investing early and making sure that you're getting the right advice, having the right tools. And I'm sure James will agree with me. We have, like in our business, we have a circle of advisors. We have, access the people that I've tested and I trust to be able to give great advice to my clients. Financial advisors, financial planners, mortgage brokers. There's the world, and we all have these great relationships where we've tested these people to make sure that they are great advisors for our clients as well. And I'm sure James has that in their business as well.
Yeah, no, definitely. I had a client once who was doing her own bookkeeping and it was a mess. And she acknowledged herself, look, I think we need to really pay someone because they tried to save money by doing it themselves, not realizing the mess that they've now made, and it's ending up them costing them more money to actually fix the problems they've got. So I agree, like just speaking to someone first, seeing how that goes. They generally have good advisors that they've used and tested themselves. James, what about yourself? What about, do you have anything to add on, planning for the next financial year?
Yeah, and I guess this, accountants can tend to wear a couple of different hats. So, we're often speaking with clients around, have they got the right structures in place? And this is in conjunction with their lawyers, and it's making sure that the structure that they have is still appropriate. So often we're inheriting new clients or picking up new clients and kind of cleaning up their structures. So I've got a new client that I'm working with who, for whatever reason, probably has about 6 unnecessary trusts for his somewhat simple group structure. So we are, in a process of tax effectively kind of simplifying his life, because all of these entities weren't actually adding any value to it. So there's, that is probably less time, critical, and more of a, just a continually, like, is everything still acting as it was intended? There's then the other hat of the kind of the general advisor that we work with a lot of clients, where I might sit down with, I've got plumber clients that I sit down with once a month, and we're just spending an hour talking about, what issues is he facing. And, one of the things I love about what I do is I see inside of so many different businesses. And so I get to see what's working over here, or what you're doing here. I've seen that before and it's not going to work. So this guy, for example, is spending something like $60,000 a year on Google AdWords, and he can't tell whether he's getting a return on that investment. And I'm like, well, I'm telling you, you're probably not. And, so other people we sit down with, quarterly, but, it tends to be this ongoing, keeping them accountable. So, there's a lot of interesting conversations that we have, and it covers technology, it covers things, even to, there is a lot of benefit from people having an EA or a VA, of which, there are lots of, providers, say in the Philippines, where you can get a full-time or part-time EA, and, nobody is ever going to be able to do some of your tasks as well or as quickly as you can do, but you've only got a certain amount of time, and your business, your tasks in business, like going back to bookkeeping, you can pay a bookkeeper X many dollars an hour, and that's worth doing if you can go out and be selling a $20,000 contract. So it's all about getting the best use out of your time and putting that into growing your business. So anyway, that's a little.
Can I just caution against, VAs and overseas or outsourced staff that don't understand, like doing bookkeeping for you. It's generally fraught with danger. So making sure, if you're going to use those outsourced services, that they are registered, if they're doing, BAS and tax work for you and things like that, making sure they're registered, making sure that they understand. It's complex legislation. GST is not easy. There's so many, idiosyncrasies that you need to understand. And, we spend a lot of time doing CPE and CPD and, understanding legislation and education and, professional development, so that we can provide our clients with the best service that we can within the law.
Yeah. No, that's a great tip. I think people don't realize, in using outsourced foreign bookkeepers, that they also have to understand the law. It's not just a matter of compiling numbers and putting paperwork together. There, like you said, there's a lot of experience and knowledge of the law in Australia that's needed for this work. I wanted to touch on just quickly, did you, just as we're finishing up, did you have any strategies that you wanted to give to attendees today about streamlining any invoicing or cash flow management for the next, upcoming year?
Yeah, look, I think it's really important to look at how software can help you.
Yeah.
If you're still using, sales books and dockets and things like that, grab a piece of software to do that for you. MYOB is fantastic. We've got a great suite of products that can help you to right fit and get your accounting and your bookkeeping done really well. So it's really about investing in those tools that will help you to streamline those things. Again, look, I know we've harped on it, but talking to advisors is really important about this. Don't just go and try and implement it yourself. There is so much automation out there that can help you and free up time. And, time is such a precious commodity to everybody, whether you've got a business or looking at, family and all of that sort of thing. Your time is the most precious commodity you have, and you don't want to be spending it doing things that don't provide value in your business. So making sure you're concentrating your skills, your experience, and your expertise where it's needed, and filling those other gaps where you're not. I've got a lot of clients that say, I don't know what I'd do without you because I just hate doing the numbers. And that's the kind of thing you've got to answer for yourself is, where is my passion? Where is my skill and experience? And how can I fill the gap where my skills and experience don't meet those needs? And that's the really important question to ask. But automation is huge, and you can save yourself so much time by using the software well and being trained on the software well.
Yeah. And what about yourself, James? Anything to add there on any strategies?
Well, there is the saying, don't ask a barber if you need a haircut, but as a barber, all business owners need a haircut. Work with your advisors, work with trusted advisors. If you're only speaking to your accountant, once a year, and he's handing you, they are handing you a completed tax return and say, here it is, you can probably get more benefit out of that relationship. And same thing with a bookkeeper. There are, accountants, bookkeepers, there is a spectrum of, and I think most of the people who are on this call actually, want to improve. They're here because they want to learn and they want to improve. So I would say, partner with people and engage them. And the great thing, say, about even the LegalVision subscription and the people who are on it is that it doesn't make people afraid to reach out and ask a question, rather than, I don't want to get billed for 15 minutes or 6 minutes. And, I'll ask ChatGPT. So it's the same thing for us. I never want a client to say, I've gone and done this thing, I've bought this, or I've done that. I didn't check with you because, I didn't want you to bill me. So that's, again, make sure you've got a relationship where they want to have an ongoing engagement.
Yes. Yeah. And sometimes they're, sorry, Leanne.
Helen.
Sorry, you
as
go.
advisors, we should be working for our clients' best interests. So as James said, if you've got a compliance relationship, then you're not getting the best out of your relationship. You need somebody that's going to be invested. James said earlier, we get to see inside so many businesses, and that's so true. But the passion that we have is to help those businesses to make sure that they're profitable, that they're providing the results that they want, that they're meeting their dreams and schemes and things like that as well. And that's the passion. Is I get the best kick when I see my clients succeeding, winning something or doing something, or minimizing cash, making sure their cash flow is great and things like that. They're simple things, but they give us the biggest kick. So it's not just about a compliance relationship, ticking numbers and all that sort of thing. Really good advisors are invested in your business with you.
Yeah, no, definitely. We see this a lot where, just on the point that James was saying, where clients are afraid to pick up the phone and give you a call because they're worried about getting billed or they don't have the cash flow. And sometimes it really only needs a 5-minute chat sometimes to answer your question. And that way you as a business owner can then focus on your business. You can then grow your business and succeed in that front, and leave the things that you don't know as well, which is accounting, bookkeeping, and legals, to your advisors. And they can answer those questions very quickly for you. Like James was saying, with the LegalVision subscription, it does help a lot of our clients knowing that they can, book on a call with a lawyer straight away and be able to have their questions answered in a 30-minute consult without paying additional cost. So it's really helpful. And I think as advisors, we always want to be able to help our clients to succeed. And like Leanne was saying, I get a kick out of seeing my clients succeed. I don't want them worried about their legals because they don't understand it. We're here to help them understand those complex issues and guide them through them. I think that's a really great tip to take away from this point is, as business owners, you focus on your business, let your advisors do the job. Don't try to take on more work because you're already busy enough trying to get your business off the ground. That kind of takes us to, the key takeaways that it'd be kind of good for everyone to go away with. So I'm just going to bring up the slide here. Some of the key takeaways. So the first one is really, we talked about earlier is preparing early, having those conversations now with your advisors, gathering the documents, reconciling your accounts, making sure you know your STP finalizations and the deadlines, knowing what reports to put in place, writing off bad debts, essentially just having those conversations with your advisors now. Secondly, contacting your bookkeepers and accountants to understand the requirements and ensuring your tax planning is on track for the end of financial year. You're not going to them on 30 June and saying, hey, I need help, because they're probably going to be quite stressed out and struggling to help you.
We schedule our end of financial year a lunch on 30 June, so we're not available.
Oh, so you're not available. Well, that's good to know in advance. The third is, knowing your compliance requirements and the deadlines, and making sure you're not, as James mentioned, backdating documents because you could go to jail. It is illegal. And the fourth, making sure you know your deadlines, as Leanne has spoken about earlier, just putting them in your calendar, knowing that you've got those obligations and deadlines you need to meet. That's your TPAR, STP, ESS filings. We don't want to deal with penalties if they come about. And then lastly, looking ahead, when you're looking ahead, looking at your past year, what have you done that's been successful? What do you want to take away from, this year that you want to continue doing? What is something that you don't want to be doing? Do you need to plan ahead now? And start setting some goals and budgets. So that's really kind of having those conversations with the advisors to kind of plan for that next financial year as well. Was anything else, Leanne and James, that you wanted to add to those key takeaways before we move on?
No, it's good.
Just the one thing, the other thing I don't think from that 30th of June compliance requirements is ensure that your super is being paid within guidelines as well. So, super has to be paid 28 days after the end of every quarter, unless you've got a super fund that requires more. But that's what we're looking at, and that the avoidance of that or the non-payment of that is the debts and penalties are significant on those. So making sure that you're paying those within time, and if you're paying through the ATO Super Clearinghouse or software or super fund clearinghouses, they will have strict deadlines that you have to meet to ensure that those payments. So it's not just about paying it. The deadline says that the payments must be in the employee's super funds by that date. So the 28th of July for the final quarter. Also talking to your advisors about whether there's, depending on your business structure, whether there's any benefit to you doing further super deductions to meet the super guarantee caps is a good conversation to have. And if you're looking at tax as well, and James, correct me if I'm wrong, some prepayments, if there's prepayments you can make to get the deduction this year if you've got a big tax bill, can often help as well. Things like insurance, subscriptions that you pay, those annual things that you might be able to bring forward and get that deduction in this year. So there's, again, a couple of other things that we really didn't touch on.
And there all are a lot of sort of, end of year tax planning checklists that go around, and all those things are on it. The other point on super is that if you want the tax deduction this year, it has to be received by the fund before 30 June, because super is only deductible when that happens. Another interesting thing that people don't often think about is that if you are planning on paying bonuses in the new financial year, if as a board of directors, you sit down and you actually have a meeting and you make a resolution that we're going to be paying $200,000 of bonuses or whatever it is, you can get that tax deduction this side of the financial year rather than when you actually pay it next year. So again, it's not a saving, but it's you get the time benefit of, deferring that because you won't have the deduction next year.
Yeah. No, those are really good points. Look, superannuation is quite important. As Leanne mentioned, there are significant penalties in not meeting the deadlines with super, and that's very strict. I think just on a legal perspective on super, just quickly, is just making sure that you have checked with your advisors as to whether your contractors fall into the rules as to whether they're deemed an employee and whether superannuation should have been paid for them. So making sure you've checked that with your legal advisors, and if they are, then the superannuation amounts should be paid this financial year as well within those deadlines.
And the super legislation has no wriggle room like ATO, like tax legislation has. So the fines and penalties cannot be remitted on super, on late statements, super guaranteed charge statements and things like that. So, it can be a minefield. The penalties are significant.
Yeah, no, definitely. Thanks for that, Leanne. So now, just as we're concluding from the webinar itself, I want to just go through some of the final PowerPoint slides. So here we've got an end of financial year checklist that you can download. I think it'll be really useful just scanning the QR code. So if you want to do that. Just want to jump ahead to the next webinar that we have upcoming with LegalVision you might be interested in. So it's ETA versus startups, advantages of entrepreneurship through acquisition. So that's on the 15th of May, 11 a.m. You can register on the LegalVision website on the events page. Just moving quickly to the LegalVision membership here. So on your page, you can see here that you can claim a complimentary legal health check. If you want, we can help you discuss your businesses. We have a membership subscription with LegalVision, which means that you get unlimited access to our full team of 100+ specialized lawyers. This is for your business's usual legal needs. It's kind of like having your in-house legal counsel, but for a fraction of the price. So as you can see here, some of the benefits is receiving unlimited document drafting and reviewing, unlimited legal advice consultations, and unlimited domestic trademark registrations, and much more. So as we move on to the next slide, you can contact our panelist and the contact details here. So Leanne's details are here. You can contact her on her email address. You guys will get a slide afterwards anyway, so you'll be able to have these details on hand. And then also James, so his details and email is there if you wish to contact him on any of the tips that he's given today. So thank you so much. That was the main part of the webinar. We're just going to move to the Q&As. So we've only got a few minutes left. So we've had some questions already that has been answered already by James and Leanne, so that's really great. Some of the other questions that we've had that we've had pre-submitted were in regards to debt. We've had a lot of attendees today ask about how do we deal with unpaid customers and what steps people should be taking to recover the money. So that's been a common question that's come through. And then also, what's the best method in seeking debt recovery when you have bad debtors, and is it worth pursuing? So maybe James, if you could touch on those points there.
I think Leanne will be
good
for this because accountants, we do have these discussions, but we're not in the day-to-day doing accounts receivable. So I think I might add some stuff after Leanne covers it.
Thanks, James. Look, I think I did touch on this earlier. So, it is all about making sure that you're invoicing fast and ensuring that your customers have multiple ways to pay you, setting expectations around what your terms and conditions are, and perhaps even looking at LegalVision for those terms and conditions to be done for you, so that you've got that document in place that you can rely on. Ensuring that you're using the automations in software for automated invoice reminders, statement reminders, and that sort of thing. And also looking at that debt management policy as an overall. Perhaps having somebody outsourcing that debt management to somebody, but you need to be keeping on top of your accounts receivable or who owes you money. You really need to be doing that because that's the most important part of getting money coming into your business, to be able to pay everything out and get some money in your back pocket. So it is the most important thing in your business. And if you're not really good at doing it, then you need to find somebody that can help you to do that. So far as I think, Helen, you're probably better placed from a legal point of view of what, if you do have a lot of overdue
Yes.
customers, how can a legal team help you to do that as well?
Yeah. So yes, definitely, Leanne. So if you've already passed the point where, you've put in place strategies and you haven't been able to recover the debt, then the next step is really speaking to your, your lawyers. So we have a disputes team who does a lot of debt recovery. I'm not in that team, but I know that they do a lot of work in, negotiating the debt, speaking with the advisors, going through the terms and conditions, the contract itself to ensure, what legal avenues can we go down to ensure that we can recover the debt. You may need to issue notices through the courts and issue a statement of claim, file a statement of claim and try to recover it through the courts. Our lawyers will most definitely go through, is it worth it? If the debt is, not significant enough to go through the court system, it may be best that you might just engage a debt recovery team to go through and actually, you sell the debt to them and they recover it themselves, as opposed to you spending the money. So you lose a bit, but you're less removing the stress and headache from you, so you can focus on your other paying customers and potentially try to tidy up your terms and conditions or contracts. It may possibly be that your contracts have a lot of loopholes that haven't been considered from a legal perspective, and we may need to tidy those up. So if you're in that position, the first step is really speaking to your lawyers. We can definitely have a conversation with you on any of the debt recoveries, looking through the different strategies, depending on the debts, depending on the documents that you have in place. Did you have anything to add on that, James?
No, on the debt recovery, I think you've covered it.
Yeah, I think there was one question there where somebody said they've got significant outstanding. So my question would be, why is that? What has happened to do that? And that's where you have to start. Why are there so many of your customers that are not paying you? And then look from that point forward. In a lot of industries, especially in construction and things like that, it can be a good idea to look for an upfront payment. Maybe 30% of the contract value as an upfront payment, which then sets an expectation. But a lot of it is about talking to your customers about your expectations. If you're not setting those expectations, my terms are 7 days. I give you all of these options to pay me. If you don't pay within 7 days, these are the steps I can take to recover that debt. So you need to be really clear on that. And it doesn't have to be complex, but it needs to be legally binding.
Yeah. We've had a question about rates of tax. They might have been referring to the tax cuts that are coming up as well. So it wasn't clear as to what the question was exactly about, but tax rates. So did you guys have any comments about the upcoming tax cuts that are coming up?
I'll handball that one to James.
Yeah, I mean, again, I think the tax cuts that might be talking about were in effect this current year's FY25. So that kind of the very modest increase to the top tax bracket from 180, which it has been for 20 years or something, it's now 190 before you start paying 47% tax, including Medicare levy. And speak to people all the time, $190,000 today buys you a lot less than $180,000 bought you 20 years ago. So, this tax, bracket creep hasn't really, I think it's still a big problem. The other change was, couple of cuts at the lower end where, it went from, I think 17 down to 16%, and there will be another decrease in that sort of lower, less than $45,000 mark. And also the middle bracket went from 120 to 135. So it's sort of, there's been movements. All of the payroll systems automatically take care of it, but it's, as part of the tax planning that we do with our clients, it might just mean that instead of paying, people within the family group $120,000 before we hit 39%, maybe we're paying them 135,000. So yeah, they were pretty modest, I think.
Yeah, no, I agree. We had a few other questions, but we have also gone over time. So if you have any other questions that we haven't answered, please message us directly and we'll be able to get in touch with you. As we mentioned earlier, you can claim your free complimentary consultation in which we can answer your questions, and also MYOB special offer as well, where you can receive 6 months for free if you buy 1 month. So you can click on that link below. So that's all the time we really have today. As I said, you'll get a feedback survey at the end of this, so please complete that if you can. That'd be really great. And thank you so much for joining us. So thank you, panelists James and Leanne. I really appreciate your time, expertise, and experience that you shared with us today.
Thanks, Helen.
Thanks, Helen. Thanks, everyone.
Thank you. Thanks, everyone. Bye.
Hey, everybody.